It's time for the market update.
Bill, let's get into a market update here for June. I know the biggest thing a lot of people have talked about, not just in your industry, but across the board with the economy and anything dealing with financial impacts, is a debt ceiling. And we kind of been watching this. And hopefully when someone is watching this episode, the debt ceiling issue's been managed and they've come to an agreement in terms and the bill has been passed. But I know over the last few months, this has been a big topic of conversation. It's had a big impact on the mortgage industry. So kind of bring us up to speed on what this has meant for rates and kind of what you're watching.
Yeah. This is a really important topic right now in our industry because as the rates started to rise late in 2021, the reason was mainly inflationary. So now that we see signs that inflation is under control overall, which is probably like the larger chronic issue for rates, there's now this really acute issue that we're dealing with. And that issue is the debt ceiling. The debt ceiling means that if we raise the debt ceiling and we appropriate funds for the U.S. government to pay their bills, and I think everybody knows that much. I think where it has an effect on mortgage rates is our U.S. government issues bonds, children for years for birthdays and communions and all kinds of life events would get like a U.S. savings bond. And that's you lending money to the government with the idea that they're going to pay you back. Mortgage notes are bonds that are backed by Fannie Mae and Freddie Mac. They're quasi-government agencies. So people who purchase these bonds have been a little gun shy because they're saying, I'm not going to buy the bond if you don't have the money to give us payment back for the money that we lent you. If the debt ceiling does not increase, technically those bonds could be in default. Now, we know that's probably not going to be the case. The U.S. government has never defaulted on debt. We have a AAA bond rating, but when these issues come about and we're close to a deadline like this and we do not have a clear-cut solution in place, the market gets jittery and people sell off these bonds. When they sell off the bonds, the rates go up. Okay, so it's been some treacherous waters, I think, for a lot of people and something that everybody's keeping an eye on. So do you think this is kind of in the rear view now, hopefully in the next couple of weeks, and things might start to settle down again some? So Ben, by the time this show comes out, I hope you're right that we have come to an agreement on both sides. And that is the hope as this thing moves through Congress, which it made an important step yesterday, which moves us closer to an agreement. But if for some reason we don't make an agreement, it could cause some resounding effect. And rates, right now, rates are roughly 7%. I wouldn't be surprised if rates jump to 8% if we don't get this debt ceiling increase approved. Now, if rates go to 8%, they are going to get this debt ceiling issue remedied. And then what we believe is that rates would come down pretty quickly. So again, this is more of an acute issue. But if you're buying a house right now, it's definitely a concern. You're feeling the impact of those higher rates.
Yeah, I don't know. I think I saw that maybe a headline that the mortgage industry is maybe seeing less interest here in the last month or so than it has in a while. So hopefully that all turns around. But something to definitely keep watching. And I guess if we do hit 8, when's the last time we hit 8% on the mortgage? Did we ever hit that over the course of the last year?
We never got to 8. We got to about 7.5% for about 30 days. And so I got into the mortgage industry. My first day was May 1st, 2002. Rates just hit 6%. And at that time, 6% was like the most amazing rate that anybody had ever seen. So I personally haven't seen 8% on a 30-year fixed. I do believe late 90s would have been. So you're talking 25 years ago since we've seen a rate that high.
Wow. Well, if you have questions for Bill, want to follow up with him again, always find us online at smartmortgageshow.com, or you can call 484-352-4151.